Hey, 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 yeah, yeah, yeah. Hey, yeah, yeah. Motherfucker be like, yeah, yeah, bro. I'm gonna listen to my Spotify playlist type shit. Yeah. Come on, let this shit. I jump that don't play him. Don't play him. Don't play him. Hey, we be going over. We be getting rid of this volume, hey. We be going over how to set a take profit and stop loss. Hey. Oh my god, just make my misery end right now. Okay. On the higher time frame, we are in an uptrend. I wonder what the fuck we're doing in this uptrend. Maybe we take this liquidity right here. Boom, boom. Right? Liquidity pool. What is this that I'm fucking seeing? An order block. Wow. Wow, guys. Boom. So retest it. Market open. 9:30. Let's look to stroke penis together with dick and balls, as you can see. Boom, boom, boom. All right, let's wait for our drawn liquidities to get hit. And where are drawn liquidities? Well, you got one right here, right here. Boom, bam, 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 bam. Because I want to see price go higher because we want to have our move going lower. What else do we need to mark out? Drawn liquidity down here because we need to equate for the bias up and down. And by the way, guys, you should be taking a point average, at least on NASDAQ, since we only trade NASDAQ around here, of 200 points. So that's about, that's 100 in up direction, but that's the highest pool of liquidity. And then down, 200 points. Like, see, around these two liquidity pools. You want to mark everything out 200 points because it's very probable that I can move 200 points in either direction for your normal AM sessions. So mark all your confluences out, but we're looking for longs today. Therefore, we're going to be marking our confluences up here, right? I guess let's find a order block right here, leg that causes a liquidity sweep right here, but we just only see the wick. If we go to the 15-minute, from the half hour, we go to the 15-minute, we actually see the candle. So we can take it from the body to the top. Great. This is an order block with liquidity pool inside of it, starting from here. So I want to see price project off of here. Perfect. Let's find our entry model. Okay. Oh, perfect. Price broke structured towards the upside on the high time frame. Let's go to the 1 minute, look for an entry. So a broke structure already right here, but then retrace down to it didn't retrace to fill an imbalance actually. It just kind of retraced down. I guess you can say technically it retraced into this order block and had a really nice reaction out of it. I actually would have taken this trade because you don't always need, like, here are our confluence checklists that we can go over for this trade. Liquidity sweep, high time frame PD array, which is our order block right here, and then breakup structure on the 5 minute, right? Because if you go to 1025, right, and then you go to 1020, look at 1020 right here, 10 to 20 candle close, meaning the 5 minute close right here, and that's above this previous high. So we broke structure in the 5 minute. Now we're waiting for a retest. See how price goes down, taps into this order block. Absolutely insane rejection. You guys learned about candlesticks in the first episode. How the wick happens in the bottom. So essentially what price did within the 1 minute, it opened here. It was just like, yeah, I'm gonna do my thing, and then I'm gonna go down. Whoa! Boom. This is price action's behavior within this 1 minute candlestick. So we saw a really nice reaction out of it and a close. Therefore, I would have entered the trade. Now, you might be wondering, where am I going to be setting my take profit and stop losses? Well, the first thing that we're going to be worried about is our stop loss, okay? We're going to go over this with time, but the stop loss is way more important than the take profit, okay? You guys need to fucking get that into your brain. So the first thing that you guys, the most safest, the absolutely most safest thing you could do, okay, and this has to do with your model. So you need to back test and find out what works best for you. The absolute most safe method is by drawing it beneath the most recent swing low. So essentially what a swing low is, if you don't already know, which you should know by now. I'm not sure if I taught it though, but if you don't know, I'm not 100%. I'm kind of all over with this course, teaching a lot of different topics. Swing low is basically a high time frame, higher high or lower low. So if you go to the 5 minute, see how's a 5 minute lower low? Therefore, in the 1 minute, it's considered a swing. It's not too important. It kind of just means higher time frame or external, whatever. Safest place to put it is here. But that would actually have to mean that you would need to target a draw on liquidity that is equivalent. So probably this guy right here. Normally, I probably would have gone for this guy, right? But look at that RR. Absolute dog shit, right? I'm going to target this guy up here, right? Now, if you were to go for, this is like a lot more risky because price could easily retrace back down to it since it's less points, but we favor the high time frame. You could draw underneath this recent low right here, right? And your RR would increase, but it's more likely that price could wick into and take you out. Let's just go to the 5 minute, and on the high time frame, we've broken structure. Well, we're bullish on the high time frame. However, on the internal time frame right here, on like the 50 minute, we actually broke structure right here towards the downside. Therefore, I don't want to see us come all the way up here because on the 50 minute we're bearish. Even though the high time frame we're bullish, we're only in these trades for like less than an hour. Therefore, we're kind of playing by the 15-minute time frame. So I don't want to see us come up here. We could, but it's more likely that we're going to reverse here. They come up here. So, well, when I see you do take this liquidity right here, right, guys? So this is a good trade. I guess to play it safe, we could just set our stops here. 1.6 R. That's actually pretty nice. Let's just see if it plays out. All right. Okay, perfect. Okay, this is actually a beautiful example. So we had our TP absolutely smashed. Okay, but what would have happened if I had set my stop loss? I really don't like how this looks, bro. Like, it looks so weird. I'm just gonna go back to the 5 minute. Actually, I'll go back to 1 minute. I gotta show you. Remember when I said I was gonna set my stop loss right here beneath this low? Look what would have happened, right? Because you put it on the low, but you put it a little bit beneath, a couple points beneath, so it doesn't like take you out. Look what happens. You would have gotten taken out by like literally like how many points is this? Like 1 point. This is what I mean by playing it safe and sorry. So look at the RR that you're risking. Right now, we're at a 2.3 RR. But if we drag it beneath this low, 1.6 RR. So we're losing, a quite significant part of our trade in terms of risk to reward. However, we confirmed the fucking trade because we did that. You understand now how RR and win rate have to balance each other out. Thank you for joining my WAP. Your soul will be very much deemed useful here. So that's what I mean by managing your risk, okay? And managing your trades. You need to backtest your strategy and see what works for you best. If you're the type of guy that likes tight stop losses and super high returns, but you realize you need to win less of your trades. If you're that type of person, go for that type of trade. It all depends on your psychology and how you see the market. Let's go over another example of how to set RTP in SL. Actually, let's just go over, the next day. Sure. Next session. Why did we go so far ahead? Or is this Friday? Ooh, actually. Next session. All right, perfect. Like, I don't understand why it just brings me so far ahead. This is so stupid, honestly. Whatever. I hate this. This is so dumb. FX replay. Most annoying thing ever. Probably because I don't use it. I backtest on TradingView. Let's just play it safe. Okay, perfect. Ugh. Let's go to the high time frame. Let's clear our chart. So we're bullish in the high time frame. Where are we drawing to, guys? Well, I wonder. Maybe this freaking liquidity pool. Just a wild guess. Wild guess. Now let's mark some liquidity. This high right here. This high right here. Lower time frame. Anything we're looking for? Well, order block right here. Liquidity right here. Leg that took it out in the 15 minutes. A high time frame PD array. We also have liquidity swept here. Okay. And since we're bullish, I want to see us go up. But what does that mean? That means we have to go down first. And when you look at that, it's about freaking 8 o'clock. and it's near market open. Look what happens. Look how we reject, guys. Wow, guys, look how we're currently. Wow, I wonder what's gonna happen, guys. I wonder what's gonna happen. Okay. Here's a fair value gap. Oh, here's a bunch of imbalance actually. So this is actually a pretty good example that I kind of want to use here. This would be, I believe, like a 15-minute. Yeah, this would be their 15-minute. Let's just mark it like that. Make it simple for everyone. 15-minute fair value gap, right from here to here. Okay, that's our 15-minute fair value gap. I want to see get inverse because we have our drawn liquidity. Okay, we also have this liquidity right here. Perfect. Another liquidity pool, right? We tap into it, chop up. So currently, so this is what happens when price hits this area. Okay, right now we're just doing our thing, whatever the fuck. Liquidity pool number 1 taken at 7 a.m. Chop it up, go down, tap into this higher time frame order block, which is our high time frame PD array, premium discount array, as well as this liquidity pool that's also level with it. What do? Reject, chop it up within this fair value gap that was formed on the 15-minute. What do I want to see at market open? I want to see bullish reactions because we're chopping it up in a resistance zone, aka an imbalance, right? So let me hop on the 3 minutes. Chopping it up. I want to see this break out of this order block and fair value gap. I want to see break out. Oh, huge rejection here. Now I'm interested in a trade. When you see these types of really gigantic rejection candles, it's telling you that there are buyers, or like rather in this case, buyers interested in the market. You see this fucking gigantic rejection. People are saying, I don't feel like selling anymore because price went down here. It's like, nope, going straight up because people had resting orders down here for whatever reason. In this case, I don't know why we did, but it's not like a PD array that could tell us. It's probably like some motherfucker putting in a bunch of orders. Whatever. 1 minute. Keep going. Chop. Whoa! There we go. That was news though, actually. Yeah, that was news. Okay? But the point is we had a really bullish reaction out of it. And what did we do? We closed above the fair value gap. This is the 15-minute fair value gap here. But let me tell you something, guys. Would you take the trade? We're going to put our stops below either the fair value gap or the most recent low. And where we're going to target liquidity up here, right? There's also liquidity pool right here. Now we can also partial out trades. I'll get into that later. We don't need to worry about that. It's a 1-to-1 R. But do you really think it's just going to keep shooting straight up, especially during news? Like news candles happen in one instant, okay? They don't keep fucking on going, okay? It's not like news candle happens and then it just goes up and up. And no. It happens like once, and then the next minute after, maybe it'll go up a little bit and maybe back down, and maybe just go down. That's it. And then resumes normal price action. You don't want to take this entry. You want to wait for a retrace into where, I wonder, maybe our imbalance right here, our inverse fair value gap, right? What do I want to see us do exactly? Well, I'll show you. I want to see us go down, have a bullish reaction, and close somewhere around here. Look how much our RR improves if I do that, right? So set the stops. I guess we can just do this 1-to-1. Let's just say 1-to-1. Okay. Now we set our stops down here. It's almost a 1-to-2 just for waiting for a retrace. Insane. We literally doubled our odds. Let's see if that happens. Okay, here we go. Here's something very, very, very interesting. We have a 1 minute, because this is confluence for an entry model. Watch this. On the 5 minute, we've obviously broken structure, but since we had an insane bullish reaction on this candle right here, because we had our fair value gap right here, 1 minute fair value gap that formed from this news. Insane reaction. I would be interested in a trade where I would have my stops below the 1 minute fair value gap that got formed, and or take profit at the liquidity pool, either here or here. Maybe I would partial out here and break even my trade. I'll explain what that is later. However, there's one problem with that. Our candle closed bearish. I would have loved to see it flip and close bullish. Okay, that's a very important thing in these types of trades. You want to play with probabilities, right? If this candle closed bullish, I would have been much more interested. But what you can do is go into the lower time frame. Now, I absolutely do not recommend going to the 30-second or 15-second. You'll get absolutely butt fucked if you go there. Do not do that, okay? But let's just pretend this was like the 3-minute or the 5-minute or some bullshit. And I go into the 1 minute, okay? Let's just pretend I'm going to the 1 minute right now. I can't access the 30-second. Hold up. I gotta do it like this. Okay, yeah, pretend this is the 1 minute, okay? Okay, we close bullish. Perfect. I'm gonna take my entry, right? You know what? Let's actually play forward once more and just see what happens. Yeah, okay. Just pretend, right? Just fucking pretend. Doesn't matter. Once you're more experienced in the markets, you'll be able to use the lower time frames. But for now, stay the fuck away from that. I promise you'll get touched and you won't like it. Yeah, I would have taken my entry right here on that candle closure, and let's see what would happen, right? If you're an RR demon, you want to go for high RR, and that's how you see the market, that's how you like seeing it. Do this 1 2 3 R. If you don't, put it back, right? Where's our? Here we go. Taken out, right? It probably got taken out because this candle wasn't bullish, but I'm just giving you guys an example. Okay, so here's how you set your TPs and SLs, right? If you really wanted to, let's just say you were to go for your TP down here, right? 1 to 1 R. These are pretty bad fucking odds, but I can't lie to you. It follows a tree how the trend is still going up, and we could just like up. No, it's literally a fucking trend, right? Boom, 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 boom. What do we want to do? Boom, keep going like that, right? We don't use trend lines, we don't trade like that, but it's just premium discount, okay? Some people like to take their trades like this. And some people like to have literally like 1 to 1. This is nearly 1 to 1. Maybe you could have sniped a better entry. I'm sure you could have. Let's just say hypothetically you sniped the entry right here, 1 to 1. Let's just say, would you have stayed in this trade? Let's just see if you get taken out or not. Wow, that's actually insane. And let's hit our TP. There we go. That's crazy. See. If you are able to psychologically control yourself to be able to take this kind of stress, you can go for 1 to 1 R trades and win most of them. But if you can't, and you like, this is what I mean by setting your own plan. I'm gonna get into that in a future video. You need to set your own fucking plan after you backtest. You need to figure out what works for you best, what your average RR is, what your average win rate is, what you can do to improve and fix every single one of these things, and how you see the markets in your own psychological manner, and what works for you. Okay? Because if you're able to hold your fucking cock while this shit happens and let your shit hit the TP, and your model works for that, good. Keep doing that, right? To each their own, but that's a prime example of you know, of how people see the market. In fact, you could have probably actually argued that you didn't like this move because news happened. You wanted to retrace back into the inverse fair value gap, and you want a bullish reaction out of it. So you could have taken your entry right here on this 1 minute candle close out of it, set your stops below the fucking fair value gap. You're like, if it gets retested again, then I'm fucked. And then everyone sees it differently. It doesn't matter. It doesn't matter. Everyone, when I'm going on my Instagram story and I'm seeing all my friends post their trades, everyone posts such similar trades, but in their own unique manner. Like everyone just sees it a little bit differently. You know, it's freaking incredible. I can't even lie to you. But yeah, that's kind of how you set your take profit and stop losses. And yeah, we're gonna get into partialing in the next video.